All right. Welcome, everyone. We are live here with another edition of Daily Rates Live. Just give us a few minutes to go live on all the different out there. I'd like to thank everybody for joining us and any prospective partners or borrowers, of course, looking to take advantage of our non-QM loan programs, which is going to be our topic for today. So we're going to talk about loans for self-employed borrowers, also non-self-employed borrowers, of course, but we have all kinds of different options we can explore that all fall under the non-QM category. So we are a licensed lender in 35 states, as well as a broker. So we have all kinds of different unique options under the non-QM umbrella here. So we'll get started here in just a moment. Again, just want to make sure we go live on all the different platforms. All right. So we'll go ahead and get started for today. So thanks everybody for joining us. My name is Nick Hershey. I'm the president of the Mortgage Calculator. We are a lender that is licensed in 35 states as a lender or mortgage broker in order to give our customers the best access to all the different programs. Of course, we have all conventional, FHA, VA, all the standard stuff that you're used to. But one of our favorite topics are our non-QM loan programs. So that's what we'll be going over today. So first, we will get into the general rates. So let me go ahead and switch my screens and we'll check out the market today. So first off, I want to pull up here is the 10-year treasury. So this is typically the best indicator of mortgage rates, especially if you're not into sophisticated mortgage rate and MBS trading. This generally tracks with mortgage rates. So as we went over earlier this week, there was a big announcement with Fed. Typically, there was probably not going to be much movement there. You can see the markets were kind of priced in earlier this week. And then when that announcement happened, we actually saw rates rise. So rates are actually a little bit higher than they were earlier this week, just because of a little bit of uncertainty in the Fed's announcement caused a little bit of reaction that maybe they were mispriced, right? So the rates went up a little bit, and we'll see that our mortgage rates went up just a touch as well. So that sometimes happens when there's a little bit of ambiguity or a little bit of unsureness in some of the statements there from the Fed. So that's why we saw that happen. Just wanted to pull that up real quick. Let's get into today's actual rates. So it is just after 12 Eastern, 12 noon. We have all of our general rate sheets here live from all of our different partners. So these are our prices, our rates today. So these are all of our estimates with the following assumptions. So this is a standard single family home, 500,000 purchase, 300,000 loan amount, corresponds to 60% loan to value, 760 credit score, and 40% debt to income ratio. That way we can compare apples to apples across all the programs evenly. So obviously we can do the maximum amounts on all the different programs, but this allows us to compare across the different platforms. So here we have our conventional primary first up here on the top left, standard 30-year fixed loan, most people are used to, Fannie Mae or Freddie Mac insured loan. Rates coming in today, 5.875, just a touch higher than the last show. Final APR, 6.135 there. And you see the next option is FHA, our topic earlier this week, coming in today at 5.375 rate. Final APR 6.238 there with all of the upfront and monthly mortgage insurance that is required for FHA. And over here for our VA eligible borrowers and active service members and of course surviving spouses, we have our VA eligible programs. And the rates come in today for VA at 5.25 and the final APR much lower there than you see when you compare FHA at 5.512. That's because VA definitely has some benefits for our eligible borrowers. A little bit lighter on the fees there for our VA eligible borrowers. And now let's scroll down a little bit here to our USDA options. So for properties in USDA eligible areas, it's typically the rural areas of the country, the properties eligible, definitely look at these programs. Standard 30-year fixed option for USDA comes in today 5.125 rate, final APR 5.779 with all the different fees there involved in USDA. And now we're going into our non-QM means not insured by Fannie Mae or Freddie Mac. So these are unique programs, and they allow us to use different income types. So we can do full doc traditional tax returns, but we also have options for bank statements, 1099 P&Ls, and that's what we're going to get into today. But this is our best option today, coming in for a standard 30-year fixed non-QM doc option, 5.875 rate. Final APR 6.145. So you see very comparable there to conventional primary. So that's amazing when our non-QM is very comparable to conventional. And our non-QM alt doc for an investment property coming in today, 30-year fixed at 6% rate. Final APR you see there 6.321. And we're going to compare that with our conventional investment coming in at 6 as well, 6% rate flat. Final APR 6.311. So again, just a touch cheaper for conventional. Definitely great when our non-QM options are almost identical to our conventional options. And moving on to our DSCR, stands for debt service coverage ratio. These are some of our favorite loans for investors. No income or employment needed. Simply use the estimated rents from the property in order to underwrite the loan. And this is a standard 3-year prepayment penalty option, which is typical for these DSCR investor programs. Let me move it up a little bit. You can see rates coming in today, an amazing 6% flat rate. Final APR 6.284 with all the fees included there. So amazing option for investors. Very comparable to conventional. It's actually a touch cheaper than conventional because we're able to add the prepay. Conventional did not allow us to add the prepay. So it's an amazing day when DSCR is cheaper than conventional doc and all the options. So today is a great day for DSCR for our team and for any of our investors out there watching. And our DSCR with a 5-year prepay makes the pricing even better. You see here rates as low as 5.875, absolutely amazing. Final APR coming in at 6.157, and that's beating both conventional and non-QM options for investment properties substantially. So when we're able to add that 5-year prepay, we can make it even better. So rates on the DSCR are amazing today. Now we have a few more options here, but I want to get into our topic for today. Of course, keep scrolling down there on our live rates, check out all our different unique options. But let's go into our deep dive today on our non-QM options. So what I like to do is pull up an example property here. So first off, I was looking just in my area. So again, I'm here in Florida, Fort Lauderdale area. So this is a home that's up for sale. Looked like a nice home, waterfront. Definitely popped up as soon as I searched. Waterfront home. So great option here for our borrowers. And typically this might be out of reach of our conventional borrowers. So that's why I wanted to choose one that was a little bit more higher price. Conventional mortgage limits do come up, but if we want to put a very low down payment, we could not use conventional on this option. Fort Lauderdale is not a high cost area. Some other areas of the country are. Oh, this is not. So this would not be one where we could do a 5% or 3% down conventional loan. We would have to use an alternative. So that's where our non-QM options help out. So first off, we'll get into our non-QM full doc option here. So this is the lowest down payment we can do, 10% down payment. This is for this exact home at the purchase price. And our options for non-QM include no PMI required. So no private mortgage insurance here on this. So it does not increase the pricing there. So the rates, what you see here is pretty much exactly what you get. You always got to consider when you're doing a conventional loan or FHA loan or some of these other loans that have monthly mortgage insurance, you need to price that in. Fortunately for non-QM, we're able to compare apples to apples as there is never any PMI for non-QM loans. And you see here our lowest rate option, 6.875, has a little bit of discount points there, 2.5, but we do even have options to go to a 7.625 rate at having a lender credit included to help us with our closing costs. And this 10% down is the lowest down payment for any non-QM options. So this shows the 10% down payment. And some of the other details of the loan here. So this is a great option for our borrowers that maybe need to get a property like this example that are out of limits of the conventional loans and of course FHA loans as well. And they need to use a jumbo or a non-QM option. So jumbos are just kind of another way to say non-QM as well. In this case, we're using full docs to the tax returns, W-2s, whatever we have. Now, where non-QM really starts to give us some very unique options is when we're working with our self-employed borrowers. So our next option is going to be for our self-employed borrowers to use 12 months of their personal bank statements, and we can still do the 10% down option for that exact property. So you see here the pricing goes up a little bit because we're using only bank statements. We're not using any tax returns of any kind. We're simply using the bank statements to estimate the income. And our lowest rate option, 7.25, we do 10% down using bank statements. You see here at a cost of 2.225. And we have options to get the rate to 8% and lower that cost to the par rate, zero cost rate there, and all the options in between. So there's a little bit more cost here to use only bank statements, but an amazing option for our borrowers that are self-employed, can't qualify with their tax return documentation. we can just use their last 12 bank statements for this option and still get that amazing 10% down on this beautiful property. Now, another option for our self-employed borrowers is to not even have to use 12 bank statements, simply use a P&L statement from our accountant. So in this case, we're using a P&L only. This is a 1-year P&L, so just a P&L that covers the last 12 months, and we can still do 10% down payment. Now, P&L options oftentimes don't allow us to go up to 90% LTV or 10% down. A lot of times they require 15% down because they are a little more risky, since we're only getting literally sometimes a single page document of a P&L in order to underwrite the loan. And we often need to supplement that with a little bit more information, often the bank statements as well. But this is an amazing option. You see the cost is a little bit higher, so 9.125 rate, and final discount points at 2.5, because this is definitely a more risky option for our partners here. But it allows us to still do 10% down. Now, if we put 20% down or 15% down, we would get much better rates here for our P&L option. But this is pretty amazing that we have P&L options. Again, this went away a few years ago to do 10% down with a P&L, and now there are a few options that are back, which is amazing for our borrowers that need to use that option. And our final option we want to go over is an option if our borrowers don't even have a P&L or bank statements that work, we can even go with 1099 only. So if they're a contractor of some kind, working for typically one or a couple different places, and they have just a few 1099s, this is a great option where we can just take 90% of what's listed on that 1099 typically and use that as our income. And again, this is a little more risky option, so a little bit higher rates and costs. But again, for our customers that need to use it, this is an amazing program. So you see the rates as low as 7.25, a little bit of discount points here, 2.25 discount points. And again, we can buy it, get it down to 8% rate for no cost at all. So all the options in between there to still stay at that 10% down. So these are some of our most popular programs. A lot of our borrowers that need to use our alternative income still want to get the lowest down payment. So that's why we compared all different 10% down payment options for this example here. So if you would like to get your own quote, please get with our team members. They'd be happy to send you quotes for any of these programs that we have here. We have over 400 loan officers, again, licensed in 35 states as a lender and mortgage broker. And we have thousands of different loan program options, especially with our non-QM options there. So I'd like to thank everybody for joining us. I don't see any questions there in the chat. Please feel free to drop us a line or shoot us a chat there if you have any questions. But we'll go ahead and wrap it up for today. Good luck, everybody out there shopping. And again, we're all happy that the rates are down. Just had a little bit of a jump over the last day, but nothing too crazy. So